Okay, good afternoon, guys. Just a very quick weekly forecast session for the week ahead. Going to jump straight into it from the weekly time frame. We are currently sitting in a level of weekly demand. This demand has been tested a few times over the previous few weeks. We can see where it was tested at this point here with this demand candle. This market came down, respected it, came up, took some liquidity, and then continued to drive down to then test the original move for this compression up to supply, where we're currently sitting in that weekly candle now. So this is an area that's been tested over the previous 2 or 3 weeks. Price was basing above this level previously, so effectively we may be looking at a drop-based drop scenario. This move of the week past has actually performed, to my eyes anyway, a liquidity grab for lows that were currently left behind. October to November in 2021, 2020 actually, wow, 2020. So those lows have now been liquidated. We're currently sitting in demand, so it may well be an indication that we'll be looking for some form of a bullish reversal. However, we are also sitting above another level of demand, which is the weekly as well as a daily candle that we have here. This performed an aggressive volume push out of the zone, broke interim highs, and then retraced into the imbalanced fair value gap, and then moved off with compression into the higher time frame supply. Now, because it's taken the fair value gap, yes, there is obviously justification that it doesn't now need to mitigate deeper. However, we should still bear in mind that there is a higher level of demand below us, and it did create a volume push out. So clearly, there are still buy orders that were executed sitting down here. So it's an area of interest that we want to try and watch as well. However, when we go down onto the lower time frame, we can see how the market has tested the zone and reacted from that earlier level of demand that we spoke about. It's come back down into compression, equal lows liquidated, back up again, highs taken in the inefficient wick, and then we've kind of gone for sells this week. So this current move here is actually a liquidity grab to me personally, as I said in 2020. And then when we drop down into the lower time frame, because of that liquidity grab, I'm now looking at areas to possibly continue that move down or a possible reversal. So we're looking at inefficient areas within this volume push down on the 4 hour that could possibly target it as an imbalance. And then on the lower time frame, again, we're looking at obviously these zones to either be respected or held. So we've got supply here, we've got an area of inefficiency above that, and there's obviously consolidation on large term cells that are sitting up here in supply. We have got areas of lower time frame supply as well that are sitting up here that have not been mitigated as yet with the moves that occurred over the previous week. That area was not tested, so there are still levels above us, but we need to be worried that this being a weekly demand could effectively go up, take these zones, and continue bullish to then attack supply at higher levels. So we will see what happens with it. I'll show you what my projection obviously on this is. So we're looking at either coming up into areas of inefficiency, fair value gaps, and then sells deeper down, either within this zone to a lower level of demand that may be a daily demand sitting below us, or targeting this level of weekly demand that we had stacked on top of each other, as I mentioned earlier. The second scenario obviously is we go for higher levels of supply and then go for sells, or we go for the higher levels of supply and we continue on the bullish trajectory.